All right. Well, I want to thank everybody for jumping on this webinar. I know that there's more people who are going to be getting on, but I want to respect the time of the people who are on right at 8 o'clock. And actually, some of you are on at 7:45. So you first in, you're always going to win. I'd like to introduce to you John Siren. He is the CEO of AREIA Capital Management, and I'm not going to give you too much of his story. I'm going to let him tell his story. But I met John, and he explained that this incredible program that he has that helps people who are either getting started in business or people who are in real estate investing. And he's going to explain this line of credit that I've been blasting emails about and writing blogs and telling people about. But I'm pretty excited about the program and excited about what it can do for the real estate investors, for people who are just, business owners and they're looking for an extra line of credit. I know that he's going to be able to help everybody out. So without any further ado, I'm going to pass it over to you, John. Thank you so much for providing us with this webinar. And I'm going to go ahead and mute myself so that you can't hear me talking for right now. But when you get to that point, I'll unmute myself and I'll ask some questions that I asked you on the phone the other day so that people can understand just exactly why I got you on this webinar. So take it away.
Well, thanks, Bernadette. I was kind of hoping that you would tell everybody exactly who I was, because I hate talking about myself, but I'll do my best, and I'll try not to bore everybody. I appreciate the opportunity to talk to everybody, and I'm glad that everybody could take the time. The reason I got involved with this is kind of unique. I spent 34 years working with really, really big businesses, and then I retired because I got tired of dealing with, Ford Motor Company was one of my partners, and I had very large clients all over the world. So I retired a couple of years ago, and I created a foundation to help autistic children, and was totally unsuccessful at getting even one donation. So I thought I would go back to what I was good at, and that was helping people build companies. I started Aurelian, and I brought my management team that had been with me for 30-plus years back into the game. And we thought that we would introduce ways that small businesses could operate in the same manner that the big businesses operate. And we've been really fortunate, and in the last 6 or 8 months, I've hired 25 underwriters just to take care of the number of people who are applying for this program. And the reason it works so well, and I think you and I had talked a lot about it over the last little while, is it's structured like the way big companies operate. It's not the way people typically think about how they get funding. Most people think, well, I'll just go and get a loan somewhere. I'll just go to a bank. I want to buy a house and rent it out, or I want to buy a house and rehab it. I'll go to a bank. I'll go to a private lender, and I will get a loan and use that house as collateral. Well, the big companies don't do it like that. They have lines of credit that they use, and if they see a project that they want to get involved in, whether it's a business project or a real estate project, it doesn't really matter. They always have the cash that they can move, and they don't have to wait. They don't have to go to a bank and hope that the bank finances them. They can just do it. So they don't lose deals while they're waiting to see if they can get bank financing. So what I did when I decided to go back into this, I decided to go to New York. I met with all the people that I've worked with for the past 34 years, and I convinced them that this would be a very good thing to do for the economy, number one, and it could be a very good thing to do for just business in general. And after pounding my head against the wall enough times, they finally started to listen to me, and I proved day in and day out that the way we are making this money available to small businesses and real estate investors is the best way to do it. And we do it without tying up property as collateral. We do it without asking for the myriad of information that banks typically ask for. What this program is based on, and what I convinced people was the right way to look at it, is with these small amounts of capital, anything under $250,000, it is not the business that people should be looking at. It should be the individual. So we convinced everybody to look at the individual. So we don't look at the business. We don't look at what the project is. We just look at the individual, see what he has done with his personal credit, and if they've taken care of their personal credit, we can advance them somewhere between $50,000 and $150,000. And it doesn't matter what that project is. We just care about the individual. So we're not looking at the loan to value of each property. You know, we're not looking at profit and loss statements. We're not looking at historical business financials. We've decided that if somebody has taken care of their own personal credit, if we give them money for their business, we've got a good chance that they're going to continue that ethic and pay us back on time. And we've proved it over and over again that that really holds true. So we have a very high success rate of our clients. I think in part because we underwrite based on the individual, and I think in part because we give them the money structured properly, so it's not a loan, it is a line of credit. And I'm sure everybody here knows what the difference is between a loan and a line of credit. The big difference is a loan you have to pay back in a set period of time, and you have pretty large monthly payments. A line of credit can be structured so you only have to make interest payments, so it's a very small monthly payment, and you can keep the principal out for as long as you want. So that opens up a lot of possibilities for the people in the real estate market, and that's why we're getting probably 100 calls a week at least from real estate investors wanting to use our program for funding their projects, but they can use it as a rehabilitation. They can buy a house. They can use the money to rehab the house. When they sell it, whether it's a month down the road or 2 months down the road, then they can pay back the line of credit and then wait for the next project. And when the next project comes along, that line of credit is still there to use again and again and again. They don't necessarily have to go to a bank. So
now, John, before you continue, I'm assuming that you're looking to create long-term relationships with people when they get to a point where maybe they've used the line of credit for a while. Is there a way that they can increase it in case they have a bigger deal?
Absolutely, absolutely. Great question, Bernadette. What we do is the lines will grow over time. We help our clients do things that banks are looking for so that they get advanced more credit. So one of the things we do is we show them how to handle their lines of credit so that it'll naturally grow. And then as the client gets involved in more and more projects, then we can help them in other ways. We do a lot of very big projects, large bridge loans, CMBS loans, conventional loans. we do all of those things as well. This particular program that we're talking about has really been the major focus of my firm, and 99% of what we do every day is help people get started with these small loans and small lines of credit. But we have the ability to help clients at really any level that they're at. So down the road, if they need more than $150,000 or $250,000, we can help them acquire that money as well. So we're really looking to become a long-term partner with our clients. That's our goal.
That's fantastic. That's fantastic. A new type of a power team member that hasn't been previously brought to the table, I don't think. So, and let me know if you want me to click to move to the next slide on the PowerPoint, and I can do that, or you can do that.
You know, I'll tell you what, Bernadette, you know, if you had some other questions you wanted to ask, anything you wanted to cover, now would be a great time to do it.
Okay.
You know, I'd much rather take questions from yourself or any of the other attendees and just you know, go through it that way rather than sit here and just go through a PowerPoint presentation that may or may not be what's on everybody's mind.
I went through the PowerPoint. I think it's on. I think what you've got in there is on people's mind. But so this isn't just for, because we've got a broad group of people who are on the phone. We've got people who are on the webinar. We've got people who are just have small businesses. We've got people who are interested in real estate investing. We've got people who are looking to start businesses. So this works for everyone. You don't really what they do with the money. What happens where that's concerned? Do you have any kind of control where that is, or you just establish the line of credit and people use the money as they see fit?
That's another great question, Bernadette. We've determined long ago that our clients know their business way better than we know. And we're not going to tie our clients' hands anyway. Once we give them the money, we're going to rely on their expertise to use it in their business the best way they know possible. And I hear it every day that real estate investors lost out on a deal because they couldn't get financing because they didn't have the capital to borrow at a 65% loan to value. So they lost that deal, but they could have made money had they done it. So just because that project didn't fit some you know, bank underwriting requirement, they lost out on the deal. So
okay.
we don't handcuff our clients. We know that our clients know their business way better than we know. So that's why I think our clients are so successful, because we don't tell them how they can use the money. We give it to them. They can use it for advertising. They can use it for buying a business, buying a franchise, paying employees, buying inventory, buying real estate. We don't put any restrictions on it whatsoever.
Okay. Kevin is one of our attendees, and he's asking, what's a typical percentage rate? And I want to preface that by saying, if someone gets qualified for a line of credit, when does the percentage rate kick in?
Oh, great. Yeah, great question. This program, the way we do it is we don't take, first of all, we don't take everybody into the program. We pre-qualify everybody, and if you have the credit profile that that gets that we can use, we will give you a funding estimate. Then what we do is we take our clients that get approved, we package them, and we package all their information, and we go to our banks and we negotiate the lowest interest rate we possibly can and the highest level of funding we possibly can, and we do that with multiple banks. And based on the client and the location of the client, the personal credit history of the client, the business they're in, and probably about 50 other factors, we'll select up to 5 or 6 of our top lenders that we know are interested in putting money into that market segment. And we'll negotiate those rates. So everything is negotiated. It's not like it used to be 20 years ago where you woke up on Monday morning and you got a rate sheet. It's just not that way anymore. Everything is negotiated with this program. So the rates that we're seeing, I've seen as low as 8%. It goes up from there. The range is typically 8 to 14%, and usually my clients are in the 9 or 10% range, give or take. But it very much depends on what the client's profile is, and it's what we can negotiate with the banks on their behalf, because we work for the clients. The clients are who we work for, and we negotiate for them with all the banks.
Okay. So I don't think that you answered this question. If a person gets approved for a line of credit and say they're approved for $100,000, but they don't use the money for, I don't know, they don't have a deal that comes up for 4 months, when does the percentage rate kick in?
A line of credit, it works essentially a bank account. The money can just sit there literally forever, and you don't pay to have that money sit there. When you use it, that's when the interest rate kicks in. When you draw down on that money, that's when the interest rate starts. When you pay it back, that's when the interest rate stops. So that's how a line of credit works. You can have it and hold it forever, and unless you draw down on that line, you don't have an interest rate that you have to pay.
Okay. Marla is asking, and I know the answer, but Marla is asking, are these revolving lines of credit?
Yeah, it operates similar to a revolving line of credit. It's its own it's got a lot of parts. You got a lot of moving parts to it, but it is very similar to a revolving line of credit.
Okay. So an investor could do a deal. Maybe it'll take them, a couple of months to get the rehab to go through. Then they pay back the money, and then they can go back and pull from it again.
Absolutely.
For the next deal. Okay.
Absolutely.
Holly is asking, is there a minimum credit score?
There's not a minimum credit score per se, because we like to look at the entire profile of our clients. That being said, what we're looking for are people that have a history of paying their bills on time that goes back at least 8 or 10 years, no foreclosures, no bankruptcies, and usually a profile like that will be associated with a credit score of somewhere above 700, maybe 710. The national average is 720, and we see probably about 50% of the people who apply are approved to our program, and 50% don't directly qualify. So in order to help some of the people who don't directly qualify, we allow them to bring in credit partners and co-signers so we can get more people approved. So we look at the individual. I would say 700 and above, no bankruptcies, no foreclosures. We would rather see, no late payments if possible. So we're looking at the entire profile of the person.
Okay. Now, say someone has had a couple of issues. I noticed that you have a co-signer, so someone could actually co-sign and help a person.
Yes, we have a lot of people that do that. Out here in Michigan, we got hit pretty hard the last economic downturn, and still a long way from being out of it. So a lot of people here have issues, but we've been able to help them find co-signers, credit partners. Just the other day, somebody in Michigan came to me for funding. He wanted to start buying homes and rehabbing them and renting them. And he had a few issues and could not get directly funded. But we allowed him to bring his mom and his dad in as co-signers. And even though they were retired and had not had a paycheck in probably 10 years, we were able to get them roughly $130,000. So he was able to take that $130,000 and he's bought a couple of homes and he's rehabbed them, and now he has put renters in there. So he's generated an income that he wouldn't have without being able to borrow money through this program.
Okay. Holly wants to know, Dickens asked what the credit profile is, but you took care of that question. Holly would like to know a couple of things. First, how long does the process generally take? And her big one is, if banks won't necessarily lend to me directly, why will they lend to me through AREIA Capital?
Oh, great questions. Great questions. Let me take the second one first, since that's the big one. When you go to a bank, they're looking for specific things, and different banks are looking for different things. It really is it's something that's changing all the time, and it's fluid. You talk about sometimes banks have a certain appetite for this, or banks have an appetite for that. Long time ago, you didn't hear anything like that. Now things have changed. So the reason why we can get people funding that they couldn't get on their own is because we do this every day. We do this hundreds and hundreds of times every single week. We know the banks. I've worked with them personally for over 34 years. I know what they're looking for. I know which banks are looking for what, and I can take my clients and present them in a way that they can get funding that they couldn't do on their own. Even if I told them who to call, told them where to go, and what to say, I still don't think that they would be able to do it, because we do this hundreds and hundreds and hundreds of times, and you're talking about millions and millions of dollars. So when we bring a client to somebody, and with the track record that we have, the successes that we have, they will look at us and give us the opportunity that they may not give anybody else. So every day we're getting people funding, and one of the people that signed up for the webinar, Bernadette, was a friend of yours, Lorelei.
Right.
Lorelei came to me, I think just 2 days ago. She submitted her credit profile. We reviewed it, and we estimate over $100,000 in unsecured capital that we're going to be able to get for her within the next 14 to 30 days. And I guess when I'm really done with the process, it's going to be closer to $150,000. So we're very good at this. This is something I've done for so long, and I guess, you know, maybe I'm not good at everything, but if I'm good at one thing, it's probably this, because I've done it for so long.
Right.
And Lorelei is a great example of that.
Holly is also asking, are there any upfront fees and points? These are folks who are used to working with hard money lenders who charge 3 to 5 points and 15%. So that's where the questions come from.
Right. Yeah. No. I know all the hard money lenders, and I know how they operate. And when we launched this program, there's a couple things I wanted to do. I wanted to make sure that none of my clients risked a dime by working with us. So I decided not to charge any upfront fees, not to charge any points. We are a completely success-based firm. If we don't get you any money, you don't owe us a dime, not one dime. So people
and if
apply
you get
every
them
day.
money?
What was that?
And when you get money, the next question is, how does Aurelian make money on the transaction?
Aurelian doesn't make any money until we get our clients funded. When we get our clients funded, we charge a fee, but we're able to negotiate with the banks to get that fee offset. So typically, our clients are paying with interest rate, fee, everything rolled in, usually about 10% on the money. It's got a few moving parts as to how I can pull that off, but there's no fees up front. There's no money out of the pocket of our client's pocket ever. The fee comes off of the line of credit, and typically when you calculate the interest rate and the fee, the total of those are about 10% annually.
Okay. Holly's asking, even though it's an unsecured line of credit, if I have equity or collateral in a property to bring to the table, will that help?
We're not going to look at it. You know, it certainly won't hurt, and there's probably a few other things I can do to help Holly in that regard. But when you're talking about this particular program, we're not looking at that property at all. We're not going to ask for that property. We're not going to take it as collateral. We're going to give you the money purely based on your own individual personal credit. So this is over and above anything else. So if you can take that equity in that property and get funding for it from whoever, you can get this on top of all of that, because we're not interested in that project or the next project. We're interested in you, Holly. That's what we're underwriting. We're not underwriting your project. So we're not gonna look at that real estate at all.
Right. Tom is asking, do you look at tax returns and income?
We do not. We don't look at income. We don't look at tax returns. What we believe is if we give clients our money, we expect them to make money with our money, and what their current income is really is irrelevant, and what their historical income is irrelevant too, because you didn't have our money during the last 2 or 3 years. So what we're interested in is people that we think will be able to make money using our money. So we don't look at past history, we're looking at the future.
Okay. Okay. Fabrizio is asking, most hard money lenders charge interest only for monthly payments. Does this program work the same way? Does it work with amortization? How does the fee schedule work once you've borrowed the money?
Great question. Again, lines of credit are set up, and what I did is I built this program to mimic the big programs that I worked with, the really big companies, for all those years. So this line of credit, you pay interest only. When you want to pay back the principal, you can make those additional payments that go directly to the principal. There's no prepayment penalties, so you can, in effect, draw down the money that you need. Your monthly payment will be essentially interest only, and then if you want to make a payment over and above the interest, that would go directly against the principal, but you don't have to do that. You can hold that principal outstanding as long as you'd like.
Okay. Adam is asking, what are the limits? Are there limits? Because 150K goes a lot further in Michigan than it does in Massachusetts.
It sure does. Yeah. For the states like California, Massachusetts, some of the states where property values are much higher than here, what we allow people to do is pool their money. So if there is a husband and a wife, we will allow them to apply separately. So let's say the maximum is 100 or 150,000. A husband and wife could potentially double that amount. Then we also allow people to bring in investors. I have a group in Chicago. He has, I think, roughly 10 investors right now. So he's pushing upwards of $800,000-900,000 that he has to utilize for real estate investment. So there's ways to get larger pools of money by having more people involved, and that's what we're seeing in some of the more expensive states, husband and wife applying together and bringing in partners and associates and friends. So and really we could let almost anybody be a credit partner, any friend, associate, investor, family member. So there are ways to really bring in a lot of funding.
Okay. All right. I think that maybe we need to explain a little bit again about how the line of credit works, because some of the questions that are coming across are, what is the average length of the loan?
Sure. Yeah. The difference between a loan and a line of credit, the principal difference is the loan has a termination date. It's either a 5-year loan, 10-year loan, 25-year loan. It's always got a termination date. The big difference with the line of credit, and the reason I set it up this way, is my clients didn't want to be pigeonholed with a termination date. So lines of credit are open-ended. As long as you make your minimum payments and abide by the rules, you will never have to pay off the principal. It is an evergreen, open-ended line of credit. So as long as your business operates, the line of credit stays open, and you don't have to pay back the principal. Okay. So that's the main difference between a loan and a line of credit, and that's why when I met with all the people in New York, all the big funds and all the big banks, I specifically said what we want to do is we want to offer our clients lines of credit not a short-term loan, a line of credit that they decide how long they want the principal to stay out. They could, if they're flipping a house, they could have the principal paid back in 3 months. If they're renting it, they'll want to have the principal stay outstanding for longer. So again, we always give the money to our clients and let them run their business the way they want to run it, and we try to make our products, the funding, as flexible as possible. So that's why we set it up as a line of credit. There is no termination date. There is no length of the loan. It's just outstanding, and you can use it over and over again.
Okay. Tom wants to know, who are we actually borrowing the money from, AREIA or a private lender?
It depends on what part of the country you're in. It depends on what business you're in. It depends on what your personal credit profile looks like. I have a group of roughly 500 private lenders, regional banks, small banks, big banks, nationally known banks, unknown banks, well-known private investors, unknown private investors. In doing this for 34 years, I've got a very, very big base of people that I know. And for each client, I will look at that client and I will know at least 5 or 6 people who would be interested in giving that person capital if it was structured properly. And then we will work with that client. We'll structure it properly. I'll go to those individuals or banks, whoever it may be, and we'll negotiate the best deal that we can for them. So each client is different, and it really depends on what that client's profile looks like.
Okay. Once the line of credit is established, is it a fixed rate or is it variable?
It again depends on the lender, depends on the bank. Typically, they are adjustable rates tied to LIBOR, but that's just typical. Each lender has its own way of doing things. Some of them are fixed. Some of them are adjustable. And it really just depends on what the particular lender does.
Okay. Okay. So let's see. We've slowed down a little bit on the question, so I'm going to go ahead and go through the PowerPoint really quickly so that people can actually see what you put together. The first says that your goal is to provide an alternative and additional source of capital without typical bank constraints. I think you've gone over that pretty well. Do you have anything else that you want to say about that?
No, that's the core of the program. That's what I tried to do for so many years, Bernadette. I was getting large sums of money for big corporations, and I'd get calls from people, can't you just get me $100,000? Can't you just get me $50,000? Can't you just get me $150,000, whatever? And I had to tell them no, I couldn't do it, because there just wasn't any avenue for me to do that. So when I decided to put my team together and bring everybody that worked for me for so long back together under AREIA, we decided that we were going to be an alternative type of company, a company that looked to put capital in people's hands without all the red tape and without all the 3 years of tax returns, 3 years of business financials, 3 years in profit and loss statements, projections, and everything else. So this is really the core of what we do.
Okay. Ike was asking when a person applies for the line of credit, do they have to have an LLC set up? And is it set up in, even though the person is, even though the person is the one that is being, I don't know the right words to use, but is it
Sure.
set up for a business so that the business is gaining credit and whatnot?
Yeah, sure, Bernadette. To start the process, you don't have to have an LLC. It's very simple. Later on, there's a slide here that shows what the steps are, but to begin the process, you don't have to have an LLC. You just go to our pre-qualification form and fill it out. It is 99% based on what your personal credit profile looks like. Once we look at it, and for our clients that are approved, we help them make decisions that will be good for them in all aspects of business. So usually if the client doesn't have an LLC set up already, we will show them why that's a good thing to have. And some of our clients don't want to have an LLC. We allow sole proprietors to go through, but for most of our clients, it's a wise decision to take advantage of the protection available by having an LLC.
Okay.
But you don't have to have one to start the process at all.
Okay. So Kevin is asking, even though you're looking at personal credit, will you also be looking at the credit for your business EIN if you've already got a business established?
If you have a business established already, it is possible that we would look at that a little bit. Not all that much, though. We still focus on the individual. If you've got an established business with business credit, we would look at that, and in some cases that might help a little bit. It possibly could hurt a little bit, but what I do is when I go to the banks, and it is a one-on-one negotiation, I have them focus on the individual and what the individual can do with our funding.
Oh, all right.
So the past business, whatever business has been transacted in the past, you did not have the benefit of our funding, so I argue with the banks that you shouldn't really look at that. You should just take into consideration what this individual could do if we gave him $150,000.
Okay. Now, I think I misunderstood Kevin's original question. He wrote, can the credit be tied to your business so your business can gain credit with this program?
Oh, absolutely. Yes, it is. That is a core element of the program. We use the person or the personal credit history to underwrite it, to justify making this capital available. But we make it available in the business, so the business gains credit, and the business gains credibility by having these lines. And that's how our clients grow their businesses, because that's where this money is going to be parked.
Okay. All right. I think we've got all of those questions. I'm sure a few more people will be asking questions, so I'll go ahead and flip to the next slide. We've kind of gone over there. We've gone over this. Underwriting is based on the individual, not the past business. Let's see. Is there a process for third parties, and what if you have good credit scores but have some debt that you are carrying? What if you have good credit scores but you have debt that you're carrying?
It depends on how much debt. Again, everything is based on the individual, so it depends on how much debt there is. And there's certain things we can do to help that. We can help people relocate that debt once we get the lines established, a lot of people, and I'm probably one of them, when I started my company 34 years ago, I paid for everything personally, and that's how I got started. And I carried a lot of the business debt on my personal debt, on my personal credit cards and everything else. What we help people do is get that business debt over into the business and off of their personal profile. So there are
So it
steps
actually
that,
helps both their business credit as well as their personal.
yes.
Okay. All right. Francis is asking, he has a limited partnership. Is this okay, or will I be urged to form an LLC?
No, I believe a limited partnership would be absolutely fine.
Okay. Okay. And just to reiterate, Holly was asking how long does the process take generally? I know you answered it before, but go ahead.
You know, I'm not sure I went through the whole thing, but typically the pre-qualification that you fill out will take you about 10 minutes to fill out. Within 24 to 48 hours, we'll have a preliminary approval for you. Then there's a full application to fill out. It takes probably 20 minutes to fill that out. And once we get that back, the funding process takes 14 to 30 days. So clients that come to us, if they get the information to us quickly, can have funding in as little as 15 or 16 days.
Okay. I have some lenders or some, you know, brokers, mortgage people on the phone. They're saying, hey, I have clients who could use the program. How do I get paid for the referral?
Call us.
Okay.
We have we do have a referral program. We work with professionals. You can kind of see by going through our website. The biggest thing that I try to do with my company, AREIA, is always go above and beyond for our clients. I want every one of our clients who contacts us to have a good experience with us. I want them to always be able to get somebody on the phone. I always want their questions to be able to be answered. And we can't help everybody. We try to help as many people as we can, but we get back to people quickly. And for all of the referral partners that we take on, we're pretty selective, and that's the type of person that we're looking for, because, you know, it doesn't do us any good if the people that work with us don't embrace that same philosophy. So as long as the way that people operate, I'm happy to talk to them about becoming a referral partner.
Okay. The slide that we have up right now shows really the big difference between what people are dealing with and how AREIA is different. Do you want to just quickly go over that?
Sure. Forever, I was always on the bank side of the equation, both as a borrower and as a lender. And we were always stuck with loan to value, collateral, 3 years tax return, 3 years financial history. Everybody who's gone to a bank who wants any sort of loan knows that the banks always want a minimum amount of liquidity, and it goes on and on and on and on. It's almost endless. So when we put this program together, I told the guys in New York, I said, I don't want to spend all of our time looking at tax returns when that really has nothing to do with what our clients can do in the future if they had our money. So I convinced them that I was right, and I am right. That the financial history and the tax returns don't really matter. They're irrelevant. If I can give somebody $150,000, I'm interested in what they can do with that money going forward, not what they did in the past without the money. So we don't take the tax returns, we don't take the financial history, we don't take anything other than we look right at the person's personal credit history, and that's what we underwrite with.
Okay. I just flicked over to the difference between this and hard money or a bank. And we got a question from Ike. Will this line of credit be tied to me personally? Will it show up on my credit report? Also, what credit score do I have to have in order to qualify for this line of credit?
Sure, Ike, that's a great question. These lines of credit are structured to be in the name of the business, not in your personal name. So they report to the business, so the business is going to gain business credit, trade lines. So it's going to help the business, and it will not report to the personal unless there is a full and complete default. It's not, late payments aren't going to report. If there's, a problem, it's not going to report. The only time that would change is if it's a complete and utter default. And the minimum credit score we like to see is somewhere around 700. But once again, we like to take a look at the whole profile. And what we're really looking for is somebody with an 8 to 10 year credit history, somebody who has credit, has had credit in the past, bought cars, bought houses, and paid their bills on time. Somebody that has credit cards but doesn't max them out every month. So that's the profile we're really looking at, and typically the number that's associated with that is somewhere around 700, 710 to 720. 720 is the national average, and that's where I kind of like to be. And we take credit partners to help people who don't quite have that. So we try to make us try to be as generous as possible.
Okay. Kalidas is asking, what is your delinquency rate?
Quite low, much lower than the national average. And again, I think it's because of two things. One, because I think my underwriting model is good, where we pick people who have paid their bills on time. And the second is we give them the fund as a line of credit. So it's not a loan that shackles people to a high monthly payment and a set period of time to repay it. So I think the combination of the two things has allowed my clients to be much more successful than clients who do not have access to capital in this way.
Okay. Awesome. The benefits for real estate investors you've been going over: no loan to value, no collateral, no restrictions on how the money is used. You can purchase any property you want, no appraisal. And really what I love is that once you're approved, the money's there when you need it, and you're not running around at the last minute calling me. As much as I appreciate a referral fee from a hard money lender, you're not calling me 2 days before the deal is done and saying, oh my God, I need to get this money, how do you help me? So I think that that's really one of the keys. As you said, it's an easy process, 24 to 48 hours, 20 minutes funding. We've gone over pretty much all of this. The application takes about 20 minutes. The funding is within 14 to 30 days. Oops, I went too far. I've got a lot of people asking me, what's the website? How do I go to the pre-qualification? So I've got that up on the screen, and I'm going to leave that up on the screen for the rest of the time. Does anybody have any other questions for John before I ask him to wrap up and just say a last few minutes of words for everyone? Okay, I don't see any questions coming across. So, John, what's the best thing for people to do at this point?
Right there, our website is aurelianlending.com. You can go there and read all about us. That pre-qualification form you'll find under Unsecured Business Capital. It's a drop-down menu. And that particular link that you've got up on the screen, that goes directly to the pre-qualification form. We try to make it very, very simple. And if you don't have a business set up already, don't worry about it. We're looking mostly at the personal credit profile. On that little form, there's going to be another link that will send you to a place where for $1, you're going to be able to pull a 3 credit report. We need to take a look at that. That's the most important thing. Once we look at that, within 24 hours, you'll get a call from one of our business development agents. They will walk you through what we found, hopefully tell you how much money we can get for you, and then send you out the full application and a list of things that you need to do. Again, we try to keep that very simple. It's going to take no more than 20 minutes, I think, to fill out that application. And then when you get it back to us, I'll assign it to an underwriter. And within 14 days, 14 to 30 days, I should say, you will receive a full amount of funding.
Okay.
So,
we've had a couple of questions come in. If someone has a line of credit for $100,000 and they use the whole $100,000, what would a typical monthly payment be?
You know, let's say it's let's say it's an interest-only payment. At 10%, you're going to look at about $800.
Okay.
You know, everything is different. You know, every client is different, but if you end up with a 10% interest rate, that's about where you would be.
Okay. Okay. I love this question from Tommy Clayton. He said, I was thinking about opening up an LLC as I get into real estate. When should I do that? Should he do that now? Should he, you know, get on Aurelian Lending, get pre-qualified, then get his LLC? What is the typical path for someone?
You know, I'd go right to the pre-qualification form, send in the information, and let's take a look at it. And then our business development agents can help you establish the LLC. There's some things you want to do just to make your life easy, and you might as well take advantage of 34 years experience and let us give you some free advice.
Okay. That's pretty much what I was going to recommend to people is, you know, because it's a line of credit, get pre-qualified for it now. That way when you need it, it's there and you can use it for your real estate goals.
Absolutely. This kind of levels the playing surface, or actually gives our clients a big advantage, because our clients have this cash in the bank. They can go in and they can buy a foreclosure. They can go in and if a great deal comes to market, they can act on it right away. They don't have to go and hope that they can find the money somewhere, or hope they can find a private investor or a hard money lender. They don't have to do all that. They already have it, and they can. That's how they're making money, because they they have the money when the opportunities present themselves. They don't have to wait.
Awesome. Marla is asking, do you refer any clients to partners to partner together if they have similar business goals? So if you've got a real estate investor in Boston and they've got real estate goals and you know of another person, do you make those kind of referrals? Do you make those kind of connections, or do you just kind of work with people individually?
You know, I introduce a lot of people. You can imagine after 34 years, I know a few people here and there. I'm happy to make an introduction. A lot of people call me for introductions to different people. I am happy to do it. You know, I have a number of acquaintances pretty much in every state, so I'm happy to put people together.
Awesome. Okay, well, guys, this is going to be your last chance to ask a question. We've pretty much answered all the questions that are on the screen right now. Kevin did want to say, John, thank you so much for this opportunity. It's amazing. So they're happy to, he's definitely happy to hear about the program.
That's terrific.
Tommy Clayton said ditto. So I think that everyone that is on the webinar, and we are going to be sending out a replay and talking about it a little bit on our meeting on Thursday night on the 18th. So everybody come to the Boston REIA meeting on July 18th, because we are going to be talking about this again. It is going to be mostly, oh, all right, Dan just asked, how are the funds released? Got a couple people coming on a little bit after.
As a line of credit, you control how you control how and when they are released. It is totally up to the client. They are in control.
Okay. And then one last question. After the line of credit is set up, if something drastic should happen, you know, a death in the family or something, and payments can't be made, how does this work? Does it go against your personal credit? Does it go against your business credit? His partners will want to know who's at risk.
You know, in a catastrophic case like that, you know, there are probably things that can be done that would, you know, alleviate the penalties. You know, again, this is a line of credit that's established by negotiating with the banks, and in the case of a catastrophic thing like that, we would go back to them and we would do our best to close things up with the least amount of you know, problems.
Okay. All right, guys. I'm going to have that be the last question. And okay, one more question. Last question. Karen is asking: are you building a fair Isaac score for the business with the unsecured loan?
You know, we're not. You know, that's not an objective. But when we put the lines of credit in the business, you're going to be building business credit. So it will help elevate the FICO scores just by using them. So we're not really focused on that. That's not really something that we really did much with. But I think just as a byproduct of the way we structured things and the lines of credit being in the name of the business, I think that will be a natural occurrence.
Okay. All right. This is the last time I'm going to say that. That was the oh gosh. Okay, I kind of have to ask this question. Do you report to Dun & Bradstreet? Adam is asking. I'm assuming that's what DB means.
The lines of credit, they can report to Dun& Bradstreet to help build business credit. They can. Again, not a primary focus. We're getting the lines of credit established in the name of the company so that our clients have the capital to use for their business and for their investments. By doing it the way we do, there's benefits that the business will gain, and that's one of them.
Awesome. Okay, well, again, I'm going to say that I think that this is a phenomenal program for everybody. There's several people who are asking, am I going to send a replay or am I going to go over the slides at the Boston AREIA presentation? I am absolutely going to do that. It's a pretty simple PowerPoint presentation. I'm sure that you wouldn't mind if I shared the PowerPoint presentation with people, John.
No, you can send it out to anybody you like, Bernadette. I really appreciate the opportunity to talk to you anytime, and all of your people that you work with. Be happy to help as many as I can, and just let me know what I can do to help.
All right, fantastic. Well, thank you so much, and I'm going to go ahead